Welcome to the Deep Dive. Today we're really zeroing in on Cisco's latest financials. It's their fiscal third quarter for 2025.
Right.
You've shared their official press release and also an Investopedia analysis. So the mission really is to get a clear picture of their key performance indicators.
Yep, see what's going on.
Exactly. What do they tell us about where Cisco is now and, where they might be headed, but without getting totally bogged down in jargon?
Absolutely. It's about looking, well, beyond just the raw numbers, understanding what's driving them, what they might signal about the tech landscape overall. Are there big bets like in AI and security? Are they actually paying off? And what do these results tell you about their sort of long-term health in a market that changes so fast? That's kind of the core question, I think.
Okay, great. Let's dive right in that. Headline performance first.
Sure.
So revenue hit $14.1 billion.
Okay.
That's up 11% year over year. And interesting point, it actually beat their own guidance.
Which is always a good sign.
Right. And the growth seems pretty broad. Product revenue jumped 15%, and services saw a 3% rise. What's your first impression of those top-line figures?
Well, it's strong. I mean, 11% growth at their scale is definitely healthy. It suggests good demand pretty much across the board.
Yeah.
And the fact they beat their own forecast, that points to some positive momentum. Maybe things are looking a bit better than they initially thought. Sets a good tone,
Yeah, it does. And the profit side looks good, too. Non-GAAP net income was $3.8 billion. That's up 8% from last year. And non-GAAP EPS, earnings per share, hit 0.96. It's a 9% increase. Again, both of those beat their estimates.
Right.
Then you've got the GAAP numbers. Net income there was $2.5 billion, which is actually up 32%, a big jump. And GAAP EPS was 62 cents, up 35%. So quite a difference between GAAP and non-GAAP there.
We do see that difference. And it's worth quickly mentioning, GAAP is the standard accounting rules everyone follows, includes everything.
Right, the official way.
Exactly. Non-GAAP, that's where management takes out certain items, often things like stock compensation, maybe costs related to acquisitions, things they feel aren't part of the, let's say, day-to-day core business profit.
To give their view of ongoing operations.
Precisely. It's their perspective on core profitability. The fact that the GAAP numbers jumped more this time suggests some of those excluded items might have been, well, more significant drags in the year-ago quarter.
Got it. Okay, here's something I found really interesting, thinking about the future. Product orders. They saw a massive 20% year-over-year increase.
Wow, 20%? That's huge.
It is. Now, important caveat, a good chunk of that is the Splunk acquisition coming in.
Ah, right. Need to factor that in.
Yeah. But even if you exclude Splunk, organic growth was still a healthy 9%. And it wasn't just one place, growth across all geographies, all customer markets. What does that tell you?
Well, that widespread growth, even the 9% organic, is really positive. It means the demand isn't just concentrated, it's pretty diversified globally. The fact it's across different customer types too, enterprise, public sector, service providers, suggests their solutions are hitting the mark broadly. It's a sign of pretty robust demand.
And this really jumped out at me. AI infrastructure orders, specifically from those huge web-scale customers, the big cloud guys.
Yeah.
Orders exceeded $600 million just in the quarter, and they actually hit their $1 billion target for the year 1 quarter early.
Okay, now that's significant. Hitting a big target like that ahead of schedule, especially in AI infrastructure right now, that really demonstrates they've got serious traction, shows strong customer confidence in what Cisco's offering for AI. It positions them really well in a market that's just exploding.
It feels like a big validation for them in that space.
Absolutely. Hitting that billion-dollar mark early. That makes them a real player in the AI hardware and software game. It could open up more doors, influence where they invest next. It's quite something considering how fast AI is moving.
Definitely. Okay, let's break down the revenue a bit. Geographically, the Americas led the charge up 14%. EAME, that's Europe, Middle East, Africa, was up 8%, and APJC, Asia Pacific, Japan, China, up 9%. So the Americas look particularly strong.
Yeah, that regional breakdown gives you a feel for maybe different economic speeds or where their market share is strongest. But honestly, growth across all three is the key takeaway, a balanced global picture. They're not overly dependent on one region, which is good.
Right. And looking at the product categories themselves, security, huge jump, 54% growth.
54%, wow.
Yeah. Observability was also strong, up 24%. Then networking, their sort of traditional core, up 8%, and collaboration up 4%. It really paints a picture, doesn't it? Security and observability are clear drivers.
No kidding, that security number is huge. It likely reflects, well, just how critical cybersecurity is becoming for everyone. More threats, more sophisticated attacks, companies have to invest.
And Cisco's offerings are clearly resonating.
Seems so. Whether it's their integrated platform or maybe recent product launches, and observability being up strongly makes sense too. IT environments are getting so complex, businesses need that visibility into network and app performance.
And networking, still growing steadily at 8%, is good foundational strength too.
Absolutely, that's their bread and butter. Steady growth there is reassuring.
Okay, let's shift to profitability. Gross margins looked pretty solid. JAB total gross margin was 65.6%. Non-GAAP was even higher, 68.6%. And this wasn't just overall product margins, services margins. Both saw slight increases too. What does a healthy gross margin like that tell us?
Gross margin is basically the profit left after the direct costs of making the stuff or delivering the service. So high margins like these suggest Cisco has good pricing power and they're managing their production costs and supply chain efficiently.
And the fact they edged up slightly year over year.
Even small increases are positive, suggests they're maintaining or even improving that core profitability despite, whatever pressures might exist.
And that flows down. Operating income also looked good. GAAP operating income was up a really substantial 46%.
46. Yeah.
And non-GAAP operating income rose 12%. So it seems like more of that revenue is actually turning into bottom line profit.
That's exactly what you want to see. It points to good operational efficiency. The revenue is growing, but their operating expenses aren't growing proportionally faster, especially on that non-GAAP basis, which reflects core operations. They seem to be scaling well.
All right, looking ahead, they gave guidance for Q4 and the full year 2025. For the fourth quarter, they're expecting revenue between $14.5 and $14.7 billion.
Okay, so continuing the momentum.
Seems like it. And non-GAAP EPS projected between 96 and 98 cents and new eights. GAAP EPS between $0.62 and 67 cents. Was like they expect a strong finish to their fiscal year?
Yeah, that guidance suggests they're pretty confident things will keep rolling. The revenue projection aligns with the trends we just talked about, and the EPS guidance follows suit.
And for the full fiscal year 2025, they're forecasting revenue between $56.5 and $56.7 billion.
Right.
Non-GAAP EPS of $3.77 to $3.79. And GAAP EPS $2.53 to $2.58. And they specifically mentioned this guidance includes the estimated hit from tariffs based on current trade policy.
That's good transparency. Factoring in potential headwinds like tariffs helps you understand the assumptions baked into their forecast. Shows they're aware of those macroeconomic risks.
They're also looking after shareholders. Returned $3.1 billion in Q3. That's through share buybacks and dividends. The quarterly dividend is $8.41 per share. That's a fair bit of cash going back.
It is. Consistent returns like that are usually seen as a sign of, well, financial strength and confidence in the future, plus a commitment to giving value back to investors. Sometimes it also signals that they think their stock is a good buy.
And on the strategy front, they completed the acquisition of SnapAttack. It's described as a threat detection and engineering platform.
Ah, interesting.
Ties right back into that huge security growth we saw, doesn't it? Seems like they're doubling down there.
Definitely aligns with where they're seeing major success. Buying SnapAttack likely aims to bolster that security portfolio even further. Maybe add new threat intelligence capabilities or automation. Strengthens their hand in a really competitive cybersecurity market.
Makes sense. Okay, just a couple more key health indicators. Cash flow from operations was $4.1 billion. That's up 2% year over year.
Solid cash generation.
And remaining performance obligations, RPO, that's basically contracted future revenue, right?
Yeah, booked business that hasn't been delivered or invoiced yet.
That reached $41.7 billion, up 7%. And they said over half of that is expected to become revenue in the next 12 months. That seems like good visibility.
Very good visibility.
Wow.
Growing RPO, especially with a large chunk due soon, signals a continued business momentum and gives you confidence in their near-term revenue pipeline.
And finally, they ended the quarter with $15.6 billion in cash and investments. A pretty healthy cushion.
Absolutely. Strong cash flow, growing future revenue backlog, healthy cash balance. Those are all pretty positive signs of financial health. Gives them flexibility for investments, more acquisitions, shareholder returns, or just weathering any economic bumps.
Okay, so let's try and wrap this up. The big picture seems to be solid growth for Cisco. Revenue, profit. Both looking pretty good.
Yeah, definitely a strong quarter.
Especially seeing that strong demand in hot areas like AI and security. And The outlook suggests they expect that momentum to continue.
Hmm.
I think that jump in product orders and especially hitting that AI target way ahead of schedule, those feel like really key indicators for their future, don't they?
I agree. Those are probably the standout points. It shows their strategic bets, particularly in AI, seem to be gaining real traction faster than expected. And the security growth is just phenomenal.
So yeah, this deep dive gives us a pretty good snapshot based on the numbers and the analysis. Cisco seems financially healthy and strategically positioned in some key growth areas.
Right. The execution looks solid right now.
It does raise questions though, doesn't it? Like, can they maintain this kind of momentum, especially in AI and security, where competition is just fierce and constantly evolving? What do you think that landscape looks like for them going forward?